The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And there's no mystery out there. It's all about Google this morning, GOOG and GOOGL. If you're not familiar with those symbols, this is what the drill is. 749 unfair highs on the daily. This is the aftermarket trading, and that daily's not reflecting that. That's the unfair highs on the daily. Aftermarket, we went as high as, it looks like, I think this is a correct print, 823. Yeah, 823.50. So we settled back to a chilly 791. So how do you trade this thing? So looking at the daily, we had, again, kind of ramped up above that 749 area right before these earnings announcements. And if you watch this show, I am not a fan of trading these things right before the announcements. That's kind of a Kramer-esque play, if you will. That we're going to leave that to him and let him destroy people's portfolio, or half the nation's portfolio is looking at him. However you want to get the statistics on that, I'd love to know what that is. But 792 pre-market is where we're at right now. 791, 792, and if you're going to try to jump into this hurricane of volatility today with GOOG, and let me look at GOOGL really quick. 810 is where GOOGL is trading. Both of these alphabet companies, both of them cleared our daily unfair highs right before the announcement. But again, let's trade the reaction instead of the action. So let's go back to GOOG and let's just kind of talk about the insanity here and how you might jump into this right now. And if we look at the scanner, the cool thing is, going back into our dashboard here, did a pre-market video on the XLU, by the way. I hope TFNN can post it. Let's just look at GOOG. And as we look at this, again, this is reliant on e-signal feed, so the weekly and dailies aren't going to be completely updated yet. But if you look at our 240s and 60s and you look at our chart on those particular time frames, you kind of got it kind of planing off there, if you will. And looking at the so-called level of the market, there's that 792.50, 791 general area. But what's going to happen when the market opens is, these are more than likely going to stay green over here. But once we start getting some, different color changes that are starting to happen, those are going to be the predecessor of a new profile appearing, really. And what we want to do here, even on a short term, on a 60 and a 240, if you're going to try to trade this particular animal, is wait for those new inflection points to happen. There's really zero reasons to try to trade this pre-market right now without some things to lean against. Remember to play the defense if you're going to, trade these Googs and Googzels. That's the craziest way to say that in the world. But so, it's kind of a waiting game. It's, there's no telling what's going to happen here. This thing could go to 900. You always have to keep that in mind. And I don't think, that really whatever the market does today has any relevance on what's going on with this particular stock. I mean, the relative strength, relative weakness game is again, you've got some things in your favor to trade this from the strong side. But right now, after announcements like that, it's kind of a sit tight. And by the way, here's the S&Ps. We talked about, this 1912 up into 1918 yesterday being somewhat of a supportive DMZ, if you will. Here's the first of the year. Here's that pre-market situation. We actually reached a high yesterday of 1940. So, but this is interesting to me because we're getting back down into this DMZ after being up into the 1940s. This is the S&Ps, by the way, if I haven't stated that. And now we're kind of, just kind of languishing around that particular area. That when you see things bounce off of these areas, and here's the daily on the e-signal, you want to see these things kind of just get away from them and stay away from them. I do not like the way this thing's crowding back into that DMZ. It's kind of like crude oil that, again, broke my heart yesterday. And let me pull that up, just kind of give you a reminder how things can happen around those consolidation areas and why it's very, very important to put stops in. I was trying to hang in there, 32.73 down into 32. What was that 240 number? 32.37, and got a little bit too farther south than I thought it should go, and that's what stops are for. So it's the same principle with the S&Ps. If you guys are looking at it as like, hey, we closed above, we're consolidating, we bounced a little bit off of that unfair high already. Again, this can happen to the S&P, so make sure you put your stops in if you're playing this game. I think this is a very good, high probability game. It's very cool that there's a new profile edging higher than the previous profile on crude oil, if you can see here. And I know I'm jumping around this morning, but just wanted to kind of let you see a very similar situation when it comes to technical analysis that didn't work out. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were trying to finish up with crude oil. Got cut off by Big Brother TFNN. Just kidding. I love this network. I mean, I'm telling you. You watch these guys on this network, the Basils of the world, the Steve Rhodes of the world, you know, on down the line, Tom, David White, Andy Heck. Who have I left out? Larry Pesavento, of course. I always leave him out. You look at CNBC. I mean, I'm telling you, a lot of the things that they say on that channel will cross people up. They've got a lot of different angles on there. They've got a lot of different fundamental views that are really not timeable if that's a word, when it comes to, looking at, entries and exit points and, where do you say uncle? A lot of these guys will get on there and talk about something, straight in the tie and, they got the white shoes on. I'm telling you, it is complete, utter nonsense most of the time. You listen to the guys on TFNN, I'm telling you, you will get a very strict view when it comes to technical analysis. And in my opinion, that's easily more than 50% of the game. So taking a look at crude oil, all things considered, just case in point, we've talked about, hey, this is kind of the Maginot line, that DMZ we talked about. I'm out of the trade. But the good news is, for a lot of you oil bugs out there, if that's a word, you've got a profile that's kind of edged higher for the first time, in my opinion, on the dailies. Let's just see how long it's taken for that to happen. Since the 50s, all right? So still got a little bit of a change in tone here, and you've got a new floor at 29.26 on this March contract. So, what does this all mean? This means that, in my opinion, you've either got to wait patiently until you get down into that support area at 29.26, or unfortunately, you've got a little bit of a chance here. And again, you will have a new 240 profile if we start getting some more information on crude oil, to start leaning against possibly a little bit higher, which would be more of a day trading type thing. But right now, I think the thing you're hoping for, if you're trying to go long crude oil, is for this thing to actually come back down below 30 and kiss that 29.26 area. Now, let me go back to our weekly for a second. Remember that the targets on all these types of moves, if you're thinking about, piling into a crude oil trade and going a little bit heavier than normal, you got to put your stops in. That's the first thing. You got to play defense first. But remember, the upside targets are going to be, for the long term right now, 37.62. I don't think you should have any lofty aspirations that this thing's going back to 50 next week. And intermediate targets are now going to be 34.82. So you've got some really decent risk reward scenarios that are setting up for crude oil. And as we look at the XLE down in the cellar, it's amazing that that's last on the list. I don't know why that's the case. Pre-market prints right now, 56.37. Here's the daily situation. Remember, the oil stocks are still spinning around and showing some decent relative strength. I mean, some of those stocks, as you know, and I hate to keep beating a dead horse here, but some of those stocks have really been almost Teflon coated when it comes to problems with crude oil. As crude oil even pulls back, they show themselves even more. So we're looking at the XLE. We're looking at this kind of higher low situation, that started happening a little bit before crude oil started turning around. And then you've got kind of a fence to lean on at 55.81 on the daily right now. So again, if you're going to trade crude oil, you've got some decent opportunities at that 29 and some change area we talked about on the underlying instrument, crude itself. But you've also got, taking a look at, some of the oil stocks. And again, you're like, oh God, Logan's going to talk about oil stocks again. But, when it comes to trading, I mean, if you want the excitement, you're going to pay for it. I always say that. But, you want things to be kind of rote and mechanical. And when you look at oh God, he's going to show these same stocks again. I mean, a lot of these, and again, you got Range Resources that's showing a new profile attempting to appear here, so you got to pay attention to that one. But a lot of these stocks have really just been, I hate to say it, but easy to trade on the long side. So, again, until we're told differently, until we have some new information that causes us to think there's technical damage on these things, you've got some things lining up in your favor, namely the XLE in general, crude oil, kind of a higher profile. I don't want to get everybody too excited about going long crude oil here. That's not what the point of this is, but you're just trying to get some edge and put some odds in your favor. And this is seemingly starting to kind of unfold in that fashion. So seemingly is one of my favorite words. Seems like you can't go wrong saying seemingly. You get my point though. I hope that was a joke. Let's take a look at the dollar really quick. Again, still in this kind of in it to win it on the long side, stops below 98. I'm just trying to trade this lightly, have it get some momentum, find some new support a little bit higher, and maybe even add to the position. That's the drill on that one. S&Ps, again, we're kind of stuck in this DMZ. We covered this a little bit earlier, but depending on what time frame you're trying to trade this thing on, it's still looking relatively supportive in this DMZ. But again, all bets are off below 1912 on some action here based on your appetite for risk. I don't like the way it's kind of sunk back immediately into that DMZ after getting away from it. But again, this could be a consolidation type situation. And how do we gauge that from the internals? We go right into the scanner. I forgot what the name of this product was for 2 seconds. And we're going to look at the breadth situation. Now, what we did this past weekend, I'd love to get one of the programmers on to really explain this. I think it'd be very interesting to you. We considerably sped this whole product up. If Tucker's listening, he's been involved with some structuring of financial software. I don't see him in the den right now, but he'll tell you that when you get to a certain state, it's time to back up and optimize. So again, I love this product. We spent a lot of time this past weekend and last week, actually before this weekend, to try to optimize what's going on the back end, secure things, document things, so we could kind of, again, try to speed things up in the future always by finding out where some holes are we can fill. So what's happened is we sped up a couple of servers that are running products. You're getting pre 30-second updates on a lot of these now, which we were at 60-second and 100-second updates on some things, but now we're really starting to shave some time off of this thing. And if you look at this product and you look at what's going on, there's a lot of things going on. There's a lot of calculations going on. So to deliver it to your desktop in those kind of snapshots is a really cool thing in my opinion. So let's look at let's go back to my point, which was taking a look at the breadth on our short term. We've kind of stayed positive here. This morning we're down a little bit. Obviously, we're going to have to take a look at that. And I hear the music, so we're going to continue this conversation when I come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And what we're going to do here is take a look at gold really quick. We were talking about the S&Ps and what that e-signal rebooted. That's weird. We were talking about the S&Ps and we were looking at that DMZ and trying to stay above there as again trying to play the probabilities. We're looking at the April contract on gold right now, and all important 1104 still the case here. Nothing really changing. I'm not super excited about going long gold. If you watch this show, you know that. Had a new profile appear yesterday. We talked about that big number 1124, 1125. We're kind of spinning around above there. In my opinion, we're going to have some kind of a pullback to retest that 1104, 1108 area. And as we look at this fair auction that's appeared, it's to me, I mean, we could get back into it, and then short term against the trend that's kind of developed lately above 1104, you could have some things to lean on for a retracement type move, getting back below 1125, 1124, and being able to kind of put stops oriented above that. Again, that is a kind of a contra trade against what's going on with the long-term trend that's kind of broken stride here above 1104. I just don't have any lofty aspirations that gold is going to fly up. I think we're just going to kind of meander around above 1104 now, and you've got some opportunities on the short-term trading situation. Bonds and notes just continuing to amaze me, literally. Here's the situation on the long term. In my opinion, when we have these breakouts, you've got some powerful situations to wait patiently and have them retest. Bonds and notes just don't look like, man, they just even with what the market's been doing lately, kind of edging back up. These things are just kind of seemingly sitting on the launching pad here. Kind of scary. if you're trying to be short these things. Again, all bets are off on the short side right now until we get some information that we can again lean against. We always talk about that, and it's just not there right now. Guys who have been long the notes and the bonds, God bless you. This has been a nice breakout, but again, I'm not super infatuated with getting long treasuries right now. Okay. Hadn't talked about this in a while. We're going to look at the March contract of beans, and I just wanted to show you something. This is all in the scanner, and as you see that, let me go back to our future section and let me go back to beans. So as you see this, here are these inflection points. Here's that 884 down below, and here's the 866. And as you can see, we've just been rattling around in this fair auction. And I'm showing our charts, snap charts within the scanner itself that you can access. But going back to our e-signal charts, it's just ultra cool how you can get some, trading. Beans are, especially the March contract. I was talking to, my friends who are involved with a couple of different grain operations. The largest, there's a company in Goldsboro, North Carolina, near here. They're called Goldsboro Milling. Started out just a bunch of guys that, basically, had some trucks, farmers, grain in the field, started some silos, started a decent business. This was 25 years ago, and it's actually developed into a Goliath, where they actually bought Butterball Turkey, teamed up with a company out in Kansas called Seaboard Foods, and just a massive operation. They feed, I think, east of the Mississippi, the largest bevy of hogs, turkeys, and chickens around. It's amazing what they do there. But talking to a couple of those guys, they just don't see anything really happening on these, one way or the other on the bean trade, and this has kind of been, spawning itself into a range that you want it when we're in this type of state. You're kind of selling resistance and buying support, selling resistance and buying support. That's just what's been happening on this particular trade, especially on the March contract, which not a lot of things are going to affect that March contract right now. So, and if John from Philadelphia is listening, I'd love to hear his comments on beans. He's usually got some great comments, but right now, this is just a range bound situation. Put the stops in. If you're going to do some trading and not major market turns on soybeans, you've got some decent opportunities here. All right. Had some questions in the den about Verizon, BCE, and CHL. And somebody's asking if tobacco farmers still exist in North Carolina. In the eastern North Carolina, excuse me. Let me get some Java here. In eastern North Carolina, it's some of the best. It's called the Coastal Plain, just like Jay's up in Chesapeake. He knows what I'm talking about. You have this kind of loam. They haven't drained swamps in every part of the eastern part of the state, but you get some really killer soil, and that's what tobacco really wants. And it's just like growing sugarcane out in the volcanic areas out in the Philippines. It's just good soil. And that's the case here. And the question is, do they still grow tobacco around here? The answer is yes. But that whole business has changed. That used to be something that was just, it was a market. You had tobacco allotments. You had, farmers could make $3,000 to $3,500 an acre off growing tobacco off a plot of land that was designated a tobacco allotment, and they didn't give those out. They were kind of grandfathered in, and it was what it was. So they did that so the farmers wouldn't grow every speck of square inch of land they had with tobacco. But that whole business has changed, and yes, they still grow it around here, but you don't have the tobacco markets where the guys are auctioning off different bales of tobacco and qualities of tobacco, and it's basically the machines get out there, churn up the leaves. Nothing's whole leaf anymore. They call it bright leaf tobacco around here. But yes, they still grow it. All right, so let's take a look at Verizon. So we talked about this the other day. There really wasn't any reasons to take this off. There was no new profiles attempting to appear in this particular trade, and that's still the case. We're down a little bit this morning, 50.41, coming off a little bit. But again, you look at the 240s that are guiding this trade up. The big number you got as support right now, literally, is around 49.56, and you don't have any new daily hints of. And let me just go into our dashboard here for S&Ps. Let me pull up Verizon VZ. You just don't have any indications that the long-term trade is really showing some kind of exhaustion, and no targets to really speak of here yet. So again, until you have those yellow peelbacks happening on the daily, I just can, long and strong. It's amazing. So we'll cover the BCEs and the CHLs of the world when we come back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Call-in numbers for TFNN, by the way, for any of these shows. 727-445-1044 internationally, and 877-927-6648. Always keep those in mind if you got any questions. Another stock that requested in the den, AT&T, again, very similar to Verizon, trading $35.99 pre-market here, just a little bit of a pullback with the market pulling back. But remember, you've got this kind of 240 guidance system, if you will. You've got $35.79 sitting down here. That's going to be kind of the bottom of our 240 guidance profiles, if you will, up. But again, it remains to be seen if we're going to have a kind of a new profile attempting to appear on our daily. That will be reflected right here. I'm going to pull up AT&T really quick. Well, let me search for it. Actually, let me search for it another way. Let's just go down to the T section. Here we go. There it is, AT&T. Again, you're going to get those. There's that 35.79 as you mouse over the cell. Why do I even mess with charts? And no new really information to cause you to get out of this trade. And again, that's brings up a point. A lot of times, it's difficult to let a trade breathe, especially a big Goliath like AT&T. But if you use this type of system if you're trading this on a long-term basis or an intermediate even, you kind of want to just, again, we've gone from, this is a big move for a stock like this, a 2-point move, 2.5-point move. When do you kind of start taking profits? And a lot of times you're kicking yourself if you take off these trades early. And again, there's no downside in taking profits. But a lot of times if you're in situations like this, you want some indications that there is a reason to take these off, and you've got some areas to kind of pay attention to now, a little bit below 35.79, and any new profiles attempting to appear on our daily, which will be indicated by a yellow peel back there. A couple other stocks, BCE. And kind of broke stride, got above profiles, consolidated around. This is what I was kind of hoping the S&Ps would do, same type of action and move higher. But, what do you do with this now? It looks like pre-market, it's not open yet. But remember, we want to see some new information appear to really start looking at this, as it's obviously been an outperformer lately. But again, here's the 240s. You're going to have below 40 is going to be probably your stops on that particular situation. CHL, China Mobile Limited, got a pretty serious lid here around 55.39. You've got to pay attention to if you're trying to buy this on a bounce. But again, my opinion is this stock's in a downtrend. You're kind of getting a little bit of a relief rally here. You've got better longs out there, and I'm looking at 55.39 as kind of a chance to short this stock again. So again, I know it's broken stride here on our daily a little bit, but you've got bigger headwinds coming from that weekly number, 55.39. Yeah, going back to tobacco, that's anybody when I was growing up, it was actually before they started, kind of migrants started coming in and cropping tobacco, and I was just blown away when I was a kid. I was like, I'll never be able to work like those guys. I mean, it was amazing. They could fill up 2 stick barns before lunchtime, 4 of them, which, if you guys don't know anything about tobacco, that is just that's flying through a field. It's a arduous process for a human being to go through that. So after about 5 years of it, I kind of gave up and walked into a Merrill Lynch office. I wasn't, at the first 5 years, I wasn't in the field. I was in the barn, and then I was in the, nobody forced me to do it, put it that way. But walked into a Merrill Lynch office when I was 15, and I had enough, and I said, you know what, there's got to be a better way to make money. And that's when all this started, by the way. So it was amazing to buy Intel at $8 back then, and RJR, when they bought Nabisco, made some money, which was probably the worst thing in the world. Thought I was smart, and here we are. So It's amazing. What is it? Necessity is the mother of invention. Let's take a look at the Shanghai here. Oh my God. Before I talk about the Shanghai, Tucker just brought up a point. I have passed a lot of these videos over to TFNN. I did about 15 or 20 of them. And I think Tommy over at TFNN is trying to figure out a place to house those. But I'll show you. Well, let me go into my Dropbox here. And where are we at? Well, let me see here. I think they're in yeah, here we go. See, it's even called Tommy Files. There's a lot of videos I did, some technique type situations that happen. They're all in TFNN's hands. I'm assuming they'll be posted relatively quick. I'll tell you what, I'll make a phone call and see where they're at on that scene right after the show. Thanks for reminding me. Okay, so this is the Shanghai. This is a decent news, actually. We've had a new profile appear and lock in on the Shanghai. A little bit of a supportive measure here. What is this thing going to do long term? Again, we're still in the hole in the marketplace on the long term weekly. You got now resistance at 27.82. I'm looking again to still sell this down into that 2,300 and some change area on the Shanghai. So I'm looking at this again as a new unfair high to look at from the resistance side. If that's broken, we actually could see 3,000 again. But again, you got to turn the wrench the same way. That's going to be, again, the U.S. market more than likely won't like the Shanghai as much if it continues to head south, but it's held up relatively well in the middle of all this. I mean, so here's going back to our S&Ps, a little bit of a consolidation, hopefully around these unfair highs on the daily, and Breast staying positive. You got to be looking to, in my opinion, to kind of look at that as supportive areas. We're going to take a look at IBM really quick, and then AXP. Again, had a little bit of a bounce in IBM. Profile appearing well above price action here. Still looking at this to sell resistance. Here's the short-term 240s getting back down below 123.97. Is a situation where I think you can pile into the short side again on IBM. We're going to hit AXP when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got Scott on the line with us here. Scott, are you there?
Yes, my question is about Alcoa. It just has just some really good action on it, as well as just a plethora of great articles and good acquisitions and signed contracts. Yet, I mean, look at it right now. I mean, in pre-market, it's sliding down again towards the 7. So, what's your take on that?
Well, Scott, first of all, thanks for calling in. And this is a stock I've been watching, and we have been talking about this. On the show, I mean, back on the long term, I'm showing a long-term chart right now. You're probably on a little bit of a delay. But this thing kind of got on the radar screen when it started breaking that 15, 16 area. And I know what you're saying. I mean, there's some chatter out there, but I'll just kind of give you, I mean, I own a software outsourcing company in the Philippines, and, we've got people that unfortunately owe us money that tell us, hey, they're signing it. They just signed a new contract, the blah, 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 blah. I mean, I hear stories that I don't want to hear, that we're going to pay you next week type stuff. Again, until the stock starts showing some technical, action that, is kind of a breakage of the norm that's been happening on the way down on the long term, I'd like to see some kind of base in here on the long term, on the weekly, a new profile attempting to appear. If you're stuck in this thing, you're not alone.
I'm
if you're
looking for a new position. I've been in and out of it several times. I'm looking at a new position now, and it just seems, and I know that, certain people there hate the word cheap, but I mean, I don't know any other way to describe it. I mean, it's beaten down pretty badly from what I see right now, and unjustifiably. So I think it's the short sellers. I mean, every day you can see the machine trades. It gets up to 735, 740, then boom,
Yeah.
Everybody leaves the table, and then it pushes it back.
Yeah. Again, there was a little bit of a technical hope, if you will, that happened around that 10 area, and then those kind of hopes and dreams were dashed a little bit. And again, it's just kind of,
I got stuck at that 10 area, and I got stuck at above 10. And what I did was, and people this is what really irritates me about a lot of day traders. They just wait for it to. You got to learn to pull the trigger at 9. If you think it's going lower, pull the trigger at 9, and then when it sets up itself in a trading range again, start utilizing that and work your cost average down. Don't just wait.
Yeah, I tend to agree with that. But I'd like to see a new floor put in, some new things to lean on, and orient some stops around. The good news is, as you know, I mean, it's, as you said, the word cheap. It's $7. I mean, it can only. But
it's
my
not
feeling,
like Crocs or Buffalo Wild Wings. You know what I mean?
yeah, no, I hear you, and I like actually fiddling around with these stocks that have gotten beat up. But I'd like to, just like that, those couple of those oil stocks that just started showing the couple of green shoots. They were really cheap, $6, $7, $8, $9, $10. They had just come down from, the ionosphere.
Look at CMEX, for instance. I mean, this thing. I mean, as I was trading it the other day, I heard a noise, and there was a CMEX truck 2 doors down pouring a pool. So, I mean, and they're doing the same thing all over the world, and the stock is, $4.
Yeah, we got about 10 seconds left. My personal opinion is I think commodities will turn. I think this is, we're getting close to a bottom on a lot of these things that are going on. And if Alcoa
I'm glad
could
you
just
said that, because the world is not going out of business.
Correct. Yes, I agree with you, Scott. Thanks for calling. We'll pick it up again tomorrow, guys. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.